Hi, good morning, good afternoon, everyone. Right, welcome to today's Fibonacci Retracement Strategies Part 2. Okay, you guys will be with me for the next hour or so. All right, so before I begin, I just want to be sure that you guys can hear me loud and clear, see my screen, my face, obviously. More importantly, the slides, right? If you guys are able to do so, please drop a comment in the question box in the Citrix, in the WebEx control panel. Hi, good evening, Travis. Are you able to hear me loud and clear? And see the Fibonacci retracement strategy slide? Okay, fantastic. Thanks a lot, Richard. Thank you. Okay, great. Let's begin. All right, let's begin. All right, this is the much awaited, much anticipated part 2 to my previous Fibonacci retracement strategies. Okay, so before I dive into it, all right, I just want to share with you guys a little disclaimer. Understand that the information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. Now, FP Markets has made every effort to ensure the accuracy of the information at the date of publication. All right, but you have to understand also that FP Markets does not give any warranty or representation to the accuracy, reliability, or completeness of the information contained in this presentation. But having said that, it is my duty and my due diligence as the presenter to give you guys as accurate as possible market updates during the course of this presentation. All right, so I will be doing you guys a disservice if I do not do something like that. Okay, so what we will be covering today, okay, very quickly, is I will recap for those of you who are only attending this part 2 now. Okay, if you guys are only attending the part 2 now, all right, fret not. Okay, I will spend about a good 10 minutes or so going through a quick recap of what was covered during the first part, right? So Fibonacci strategies part 1. And then I'll move on to covering a bit more, diving deeper into understanding Fibonacci retracement, looking at the unconventional Fibonacci retracement levels. And then, of course, next, once we understand the unconventional levels, you guys will understand why I share with you all it's an unconventional level later. Right after that, we will dive into understanding Fibonacci confluence zones. Right, so what are these confluence zones and how important is this? Okay, and then hopefully there will be more than enough time, right, to wrap everything up together and give it to, and I'll be able to give it to you guys, right, some live examples of how we can actually include Fibonacci retracement as part of your overall trading strategy. All right, are we clear so far? Okay, fantastic. Right, Arnie, you're asking, is there a replay of the first course? Unfortunately, if you did not attend the first part, all right, I don't think the FP Markets team would be able to send you a recording of the part 1 of the webinar series, right? However, if you stay to the end, there is an email that you can send an email to, and I think you should be able to get a recording of this second part. All right, so for those of you who are already familiar, okay, I do recognize some familiar names like Travis, Richard. Okay, I'm still looking for a bit more of the familiar names. Okay, I don't see any other familiar names for now, right? If you guys are here more often, right, please give a shout out, right? I love to try to build some sort of rapport with you guys, okay? And for those of you who are here more than the first time, right, you're not new, you know that I like to keep things a bit more flowing. I like to keep things a bit more informal. So I don't like to have a Q&A session at the end of the webinar, right? If you guys have questions, okay, feel free to fire your questions, and I will do my best to reply you guys on the spot. Okay, if there are multiple of the similar questions, right, I will group them together and try to reply them at one go. All right, so hi Helen, you're saying brand new Isaac. Not sure what that means, but yeah, hi Daniel. Okay, so I hope brand new but just as good, right? So I really hope yeah, that is that, oh, right, okay, right. So you mean that you're brand new? Okay, good. Well, I hope I get to value add to your trading as well. Okay, hi Bartholomew, right? Definitely recognize your name. Okay, so Zahid, okay, first time here, good to see you as well. Fatty, right? Okay, Fatty, I hope I pronounce your name properly. Okay, it's Fety, all right? Not trying to insult you, all right? Hi Magun, yes, recognize your name as well. Okay, so we're in the presence of many familiars and quite a number of first timers. So fret not, I just really want to dive quickly into Fibonacci retracement, a recap, all right? Because Fibonacci retracement, as I've said before, 1 hour, 2 hour is not enough, right? To really try to grasp firmly the concept of Fibonacci retracement. So for those of you who were here in part 1, I hope you guys have actually gone back to do your own homework, your own back test, and hopefully forward test as well, okay? So that you guys will know roughly what I'm talking about. So recap of Fibonacci part 1, right? Now in Fibonacci part 1 strategies, okay, now there are a few points that I've made, right? I'm going to just jump over to TradingView because I have to type this out. I don't want to use the mouse to write it out. It's going to be very, very messy. Handwriting with a mouse is really, really ugly unless I'm using a Wacom pen pad, but currently I don't have that, right? So these are the main points that I actually covered in the part 1 of Fibonacci strategy. Okay, so basically, all right, the first point is really that Fibonacci retracements, okay, consists of 2 points, right? So I actually dived into the basic understanding of what is Fibonacci retracement, what are the 2 points, what each level of the retracement suggests, okay? So Fibonacci retracement consists of 2 points. And how do we know where to place these 2 points, right? I've also mentioned that we need to draw Fibonacci, okay, in the direction of the movement, right? So we have to draw Fibonacci, draw Fibo retracements, okay, in the direction of the move, right? So if it's a bearish move, right, it's a bearish drop, then I take the first point from the top and I draw it downwards, okay, in line with the drop to the ending point, okay? So if it's a bullish push up, right, if it's a bullish rise, okay, then I draw from the bottom, from the swing low to the swing high. But we don't just draw Fibonacci retracements blindly in the direction of the movement, right? Before we can even know where to draw, we need to move on to identify swing highs and swing lows. Okay, so now some of you guys were actually confused the last time I remember as to where do we draw. Okay, sorry, move the text box to one side. I hope this works. Can you guys see? Robert, is this good? All right, I hope this is good. Okay, so swing highs and swing lows, right? Some of you actually asked, Isaac, how do I identify swing highs and swing lows? Okay, so I broke it down quite easily, right? We always start with the biggest time frame. Okay, so for swing highs, you can start working swing highs and swing lows. You can start off with a bigger time frame, and then after that, you work your way down to the lower time frame. If it is tough to see in candlesticks, okay, always use line chart, okay, which consists of the closing price, okay, closing prices, right? And at the same time, okay, to really identify the swing highs and swing lows, this is the key, okay? Look at areas of big movements. All right, so this is how we essentially identify swing highs and swing lows. All right, and then after that, of course, there's point 4. Let me just put a bit of spacing between all the points. If not, it's going to be a bit congested. Okay, so of course, moving on to the next point, the next recap point is that, how do we know that price is going to form a deep retracement, right? How do we know how far price can drop, right? I gave you guys a general clue. General is a caveat, okay? So when price breaks and closes, so the key is breaks and closes below 23.6% retracement, it generally drops to 61.8%. Okay, so when price drops, when price breaks and closes below 23.6% retracement, price generally will drop further down to the 61.8% retracement, which is a key Fibonacci retracement level. Now, of course, there was another point, right? I hope you guys remember, Fibonacci retracement should only be drawn on completed movements. Okay, now if you draw on a non-completed movement from a swing high to, let's say, price is bullish, right? An example right now would be, okay, the S&P, right? Looking at the S&P, if this is the daily, right? Let's just say this is a swing high. Okay, let's say this is a swing low to a swing high, okay, or we don't even know whether the swing high is completed yet, right? But we know that there's a swing low over here, right? And we draw a Fibonacci retracement in the direction of the trend, okay, low to high, right? If price pushes, okay, if price pushes higher, then our Fibonacci retracement is going to be adjusted higher and higher and higher. And as long as price keeps going higher and higher and higher, our Fibonacci levels are just going to keep moving, which is why the correct way of drawing Fibonacci levels, all right, is that it has to be drawn on completed movements. All right, so for those of you who have actually missed the first part, right, I'm going to give you guys the next 30 seconds to take a screenshot of this, okay, of really how to use Fibonacci retracement. Okay, so after 30 seconds has passed, all right, Arnie, you have your hand raised, right? If you have a question, just feel free to fire your questions away. Okay, it's a bit distracting to see hands raised, but I rather have questions being asked. All right, so now I'm sure you guys have already taken a screenshot of this. Then let's dive in to a deeper understanding of Fibonacci retracement. Okay, so this is here. Let me just copy it down. I'm just going to write it down here. I'm just going to copy it onto my notes. Give me a moment. Okay, so now that we are done with the recap of Fibonacci retracement, the part 1 of the webinar, let's move on to unconventional Fibonacci retracement levels. Now, what do I mean about unconventional Fibonacci retracement levels? Right, the first part of the webinar, I actually showed you guys the normal Fibonacci retracement levels, right? So for Fibonacci retracement levels, okay, we have things like that, right? Let me just change the color. Okay, so these are the levels. I also let you guys take a screenshot of these levels that I normally use very extensively actually for Fibonacci retracement, right? The levels in red are the important levels. Okay, for me, they are the important levels. So, all right, 61.8 is a key Fibonacci retracement level. 78.6 is actually a strong triangle ratio level as well. All right, so the unconventional Fibonacci levels, right, will be the levels like -2720, okay, and the 161.8 retracement level. All right, so Bartholomew, you're actually asking which is correct, 88.0 or 88.6. Not much of a difference, okay? So I generally use 88, right? You want to use 88.6, that's fine as well. Some people actually tend to change their Fibonacci. Instead of 78.6, they actually also use 76.4, but you can see it's really, really close. So not an issue as well, right? So it's really just preference, okay? It's preference. You want to put every single level, that's fine as well, but then it might get a bit confusing because there's going to be a lot of lines on the chart. All right, so I hope that answers your question. Okay, so we're going to be covering the unconventional Fibonacci retracement levels, right? So these are the levels that I'm using. Let's head back to the slides. All right, so this is an example of a chart. It can be any chart, right? But what is interesting here is explaining to you guys why the -27.2 Fibonacci retracement level works so beautifully. Okay, so follow the cursor over here. Let me just see the color. Okay, purple is good. All right, so let's say that there is an area of swing high over here, right? So price starts here, swing high, price drops down, all right, to a low, price comes back up, makes another swing high, and a strong drop down to another low again, and then price pushes up to a swing high over here. Now price has dropped all the way down, right? Price has dropped all the way down, so this is a swing high, right? Area of big movement. That is where we have a swing high. Price drops all the way down to the ending, right? Number 2, ending is here. That is a swing low. So we draw a Fibonacci retracement, all right, starting from here, the 100%, and we draw in the direction of the price movement, which is downwards, and the ending is at 0%. Now look what happened. Price has bounced higher, okay? It has surpassed the 23.6, right? So once price breaks and closes above 23.6, it comes close to the 61.8. All right, so now price has pushed up, okay, pushed higher to the 61.8. When price comes back up to the 61.8, okay, our target for our take profit, all right, will be, or rather where I use my take profit will be the negative 27.20. All right, so price, I'm expecting price to come down all the way, all right, like 0.4, price to come down all the way to the negative 27.20 retracement, after which price will show another reaction again. Okay, so let's look at what happens on the next slide. Okay, so price dropped all the way down to the negative 27.20, and it traded sideways over there before pushing higher again. All right, so it retested a very strong support level, turn resistance. All right, so it broke below the support, came back up, tested as resistance. It should drop further down to the negative 61.80. All right, so this is an ideal example, okay, a very classic textbook example of how to use the negative 27.20 Fibonacci retracement. All right, we need to see that price actually comes back to at least the 50%. Okay, sometimes it pulls back to the 61.8, sometimes it pulls back to the 78.6 before pushing to the negative 27.20. All right, so in the absence of a nice take profit level, all right, you can always use negative 27.20 as a level to take profit, or you can also use negative 27.20 to start looking for opportunities to flip your trade the other way. Okay, so Bartholomew, you're asking about what about 38.2? Now, it is possible to wait for price to come back to 38.2, but based on my back test, based on the couple of years that I've actually used Fibonacci retracement this way, I realized that the strongest and the most convincing way for price to drop down to the negative 27.20 is really when price breaks the 23.6 and it pushes at least towards the 50%. All right, sometimes price actually stops in between 38.2. Sometimes price actually stops in between here, 38.2 and 50%, and then it goes all the way down to negative 27.20. All right, but I'm just saying that is possible. Okay, but a more convincing way for me is when price comes up to at least the 50% or even the 61.8%. Okay, so now this is really just looking at Fibonacci retracement itself. Okay, in real life, right? In real life, when we use Fibonacci retracement, as I've said in part 1, never ever just use Fibonacci retracements alone. Okay, for me, technical analysis is all about looking at price, right? Whether you can talk about all the indicators in the world, they are built on price, right? Price is king. Price action is king. So I like to see Fibonacci levels line up very nicely with price graphical levels. And once I have that graphical level, okay, it gives me a lot more confidence that that is a level where price could react at. So you see, when price comes back up to the 61.8, look over here, right? We actually, if I'm going to draw a horizontal line across, okay, so sorry, this is too high. Okay, I'm going to erase all drawing. I want to draw a horizontal line across somewhere like that. Okay, and I'm going to cover it in a zone, right? Look at that, this purple line, right? It's really a zone, right? Price has tested this level as a resistance, broke above, came back down, spent a bit of time in that area, went down, tested it again as resistance, came back up, tested it again as resistance. So it's a very strong resistance zone over here, right? Now, when price broke above, what happens? It becomes a strong resistance turn support, right? So you're right, Bartholomew, overlap support, right? Or we can also say it's an overlap resistance, right? So it's resistance turn support. It's tested multiple times. It breaks below again, and it comes back up to test this zone once more. So there are many terms for this. Some call it supply and demand, trading strategy. Some call it price action trading strategy, right? Some like to call it support turn resistance or resistance turn support strategy, right? Many ways of calling it. At the end of the day, okay, it's still based upon price. So for me, price is always number one rated. And then when I use Fibonacci retracement to add in with price, okay, that is when it becomes very, very powerful. This pullback to 50%, pullback to 61.8, and then push towards the negative 27.20. All right, so this is the ideal market structure. I have to give you guys an ideal example of how it works for you guys to understand it. Okay, so this is the ideal market structure on how to use the negative 27.20 Fibonacci retracement. Okay, I hope you guys are clear. If you guys are clear, please leave a comment to say that you guys are clear. All right, so Magun, you have a question. A lot of forex pairs are range bound at the moment, moving sideways. Can we use Fibo effectively on smaller time frames, or do we have to pay attention to previous Fibo levels to see confluence? Okay, so you can use Fibo effectively on the smaller time frames. All right, Fibo can also help you, right, to point out to you whether price really is in a squeeze, all right, in a triangle, in a wedge pattern, all right, or is going to break up. Okay, so that is the power of Fibonacci retracement. Magun, why don't you do me a favor to show the rest of the participants that this is not something that I've actually doctored, right? Leave a comment as to what pair you'd like me to look at, and I will use it as an example later. Okay, so I just want to give you guys the confidence that this is not me having this 2020 hindsight bias, nitpicking kind of thing. All right, I just want to analyze together with you guys live analysis. Okay, so that is how we actually use the first unconventional Fibonacci retracement ratio, the negative 27.2. All right, so Magun has actually asked for pound dollar and euro dollar. I will get to that later. All right, so if you guys are clear on negative 27.20 Fibonacci retracement, let's move on. All right, now I'm going to talk about the next unconventional Fibonacci retracement ratio, which is the 161.80. Okay, the 161.80. Now there are two negative retracement ratio, positive Fibonacci ratios that I look at. Okay, it is actually, let me just change the pen or remove to this. It is actually the 127.20 and the 161.80. All right, now this is what Desmond, my boss, likes to call it the Nike tick pattern. Okay, the just do it, right? Just do it. Okay, so I personally find that this market structure where we look at the 127.2% Fibonacci retracement, or especially the 161.8 Fibonacci percent retracement, right? This actually gives a very good clue as to, hey, whether the market has overextended its move and whether it's going to make a reversal. All right, so it is actually a very strong warning sign, right? Zahid, you've actually asked, how did I get this 27.20% number? Any derived calculation or history? No, actually, that's a very good question, right? 27.2%, okay, is not a Fibonacci number, right? So how do we get it? All right, it is actually based off one of the harmonics ratio, right, provided by Gunn, right, WD Gunn, right? So for those of you who are a bit more familiar with harmonics, you guys will actually recognize this 27.20 level. Okay, so Fibonacci, right, like I said, this is an unconventional method, okay, but you guys can take my word for it that it does work. All right, I have tested it on equities, I have tested it on commodities, and I have tested it on FX. It does work, right? This negative 27.20. Okay, so just sharing this bit of juicy tidbit with you guys. All right, so Zahid, I hope that answers your question. Okay, Daniel, you're asking to look at Aussie CAD as well. Yeah, if there's time, we'll take a look at that. Okay, so let's look at this 161.8 Fibonacci retracement. Now, we see very clearly that price has actually made a swing high over here, right? Price has made a swing high over here, and price goes all the way down, makes a swing low, and then after that, there's a strong push up. Right, when we start seeing this strong push up, we have already identified swing high and swing low, areas of big movement. So what do? We draw Fibonacci retracement in the direction of the movement. So it's top, because this is a bearish drop, top, we draw it all the way down to the bottom, right? And then we see price has broken above 23.6 and even closed above 38.2. We can say with greater certainty that price could go to 61.8. Over here, we see that price has actually retraced to 76.40, and then after that it comes back to 100. Now, this is where we have to be very careful with terminology, right? When price, okay, when we do a retracement and price comes back up, we can say that okay, price has gone to the 23.6, it has retraced 23.6%, or it has retraced 50%, it has retraced 61.8%, yada yada, 76.4%. Now, when price comes up to the 100%, for me, I do not say that price has retraced 100%. Okay, for me, this tells me that price is doing a reversal. Okay, and that is actually what I use the 88 ratio for, right? Let me go back to the chart. Now, I'm going to erase all drawing. I'm going to show you. Okay, so let's say price has pushed up. Okay, moved upwards, right? And then price starts drifting back down, retrace, it retraces, okay, it retraces, big movement, it retraces. Now, when price comes to the 88, okay, what it tells me really is that, hey, you know, Isaac, you got to be ready. This doesn't look like a retracement anymore. It looks like price is getting ready for a reversal. And when price comes down to the 100%, breaks below it, and closes below the 100%, I tell myself price has completely reversed. I will immediately look for my next two unconventional ratios, which is the 127.20 and especially the 161.80, right? Price could very well go to these two levels because it's a reversal already, right? So that is how I actually use these levels. Okay, so I hope you guys are clear on this Fibonacci level. Okay, now let me get back to the slide. So to walk you guys through this very classic textbook example is that, you know, price has come all the way down, it has retraced, right? And then when it comes up to the 100% and it goes above it, that is what I say it has reversed. Okay, and I draw the Fibonacci from the starting point to the ending point, and of course I have the 161.8. So like we put in the slides here, always look out for a V shape, right, or a Nike tick. Okay, so between 0.1, 2, and 3, we are trying to use the 127 and 161.8 levels. So of course, price has reversed and price has pushed higher towards the 161.8 level, and then it fluctuates sideways, it trades sideways, okay, before it goes back down. Okay, so price actually paused at a 161.8. And that is something to tell me that, hey, you know, Isaac, you got to be careful. There could be a reversal from here. Okay, so Daniel, you're asking, was that testing by eye on different markets? You got to the 127 and 161 or previous studies? Okay, so this one I have also back tested, right? Not just by eye, but also I have actually live traded it on my own account as well. I can't tell you guys how many times you know, the 127 and 161.8 helped me recoup. I wouldn't say it completely covered back my losses, but it helps me recoup a bit of my losses, right, when the trade goes wrong. Okay, so Daniel, you're right. Okay, 161.8 is a Fibonacci number. 127 is not. You're right. Okay, but why 127? Again, okay, if you think of it logically, right, the negative 27.20. You flip it the other way around, okay, it is the 127.20 level. It's exactly the same. It's just the mirror image, okay? So it is the mirror image. The 27.20 is taken from Gann, from harmonics, and it's applied to Fibonacci level, okay? The proper Fibonacci number for retracement is actually the 23.6. It is not the 27.20. All right, guys, I'm putting it out there. I don't want you guys to be confused, okay? I'm just telling you that these are the magical, for me, these are the magical, unconventional Fibonacci retracement levels. All right. So Daniel, I hope that answers your question. Okay, and with that, we have cleared the unconventional Fibonacci retracement level section. So let's quickly move to the charts. Okay, so I know some of you actually had some requests just now. Okay, let me open this one. And Magun actually asked for pound dollar and euro dollar. So let's take a look at pound dollar. So pound dollar, we start off with the monthly, right? Range bound. Yeah, definitely range bound. It's a very big range on the monthly. Right over here, we see this huge as range. Okay. Right. So price is range bound, right? What do we know? Okay, all I know is that graphically there's a resistance at this level. Right, like I said, I don't like to use Fibonacci alone, okay, but I'm just showing you guys an example. Okay. So there's a resistance level there. Let's just quickly go down to the lower time frame. All right, so we have swing highs, swing lows. Okay, now some of you will argue, hey, you know, Isaac, price is really trading sideways on the daily here. How come? Because there was a last swing high over here at where was this date? February, right? It was February, last swing high where we tested it, you know, price came close. All right, but if you were to look at price action carefully, okay, you can actually identify swing highs, swing lows, right? There is a swing low over here, area of big movement, price pushed higher, right? This is a swing high, right? Price came back down to another swing low over here, right? In close, it is still compared to the price movement around the area, this is still generally a big movement. All right, look at this. This is a small movement. This is a much bigger movement, right? All these are small movements. Okay, so which is why I would consider this as swing highs and swing lows. So let me do a Fibonacci retracement. All right, this price has pushed upwards, so I will draw Fibonacci retracement from low, push it higher to high. Okay, and look what happened. Price, all right, I'm going to just zoom in a bit for you guys, and I'm going to open up the negative 61.8, right? Look at that. Okay, price has actually gone up. It pulled back, broke below 23.6, came back down, tested the 50%. Look, remember what we covered in we just covered the classic example. Okay, price has to break the 23.6%, and it generally goes to 50%. Okay, when it goes to 50% or 61.8%, we can have greater confidence that price should push down to the negative 27.20 and possibly even the negative 61.8. And look what happened, right? Price came down to the 50, it bounced, right? Pushed higher, right? And then after that, there was a strong drop to the 61.8 right there. And then after that, push towards the negative 27.20, and even when it tapped the negative 61.8 recently, right? It didn't even touch the last swing high. It tapped the negative 61.8. So if you were to use graphical with negative 61.8, right, this becomes a very strong zone for you to take profit. All right. Okay, so this is on hindsight, right? But what if we are doing a proper analysis now? What if we're doing a proper analysis now? So right now, price is actually trading sideways. Let's go down to the 1 hour. Okay, let's go down to the 1 hour. And let's look at areas of key movements, right? Big movements. Okay, there's a swing high here. There's a swing low, swing high. Same low, got to be careful. All right, market structure. Price makes a lower high. Okay, so we consecutively have lower highs, means price is downward trending. And then after that, now we have a lower low. All right, so what can we expect price to do, right? Price can make a lower high, and then it push down to make a lower low. All right, so connecting all these lower highs together with a trend line. Okay, identify the swing highs, the completed movements. There's a swing high here. Sorry, there's a swing high here, and there's a swing low here. Let's use Fibonacci retracement, right? Draw in the direction of the trend, high to low. Okay, look at that. Price has already broken above 23.6. It spiked to the 50. I'm thinking price could push up to 61.80. Right, so there can be a possible entry level here. All right, and then very simply, I can have my first take profit at the last swing low, another take profit at the negative 27.20. right? And this can be a very quick setup, okay? I didn't do a very detailed analysis, guys, right? It's just that I started with the big time frame. The big time frame tells me what? The negative 61.8 has already been reached. We can expect a reversal, right? And then I just go into the lower time frame and I look at market structure, okay? Series of lower highs, lower lows. Price is telling me that, you know, Isaac, we could very well be in a downtrend. Okay, so I play along with the probability on my side to look for opportunities to go short. All right, so I'm expecting price to push up towards the 61.8 in line with the descending trend line resistance, and then I will go short. All right, so this is a very quick, simple analysis using Fibonacci retracement alone, okay? And of course, in line with graphical level. All right, so Magun, this is pound dollar for you, okay? So please do your own analysis, right? I'm not asking you guys to, you know, sell your house, sell your car, sell your wife, sell your kids, sell your parents, right? Sell your soul and then go all in, okay? Just do your own analysis, okay? If you guys well, you know, Daniel can't sell the wife. I think my wife will probably be more than happy to sell me away instead, right? I did tell her, you know, hey, you know, our baby is crying so much. I wonder whether, you know, nowadays when you shop online, you can actually refund with nothing lost, right? I was actually asking her, can we just refund the kid? Yeah, well, she told me I'd rather refund you instead. Okay, so anyway, jokes aside, right? Yeah, this is a very simple analysis of pound dollar. So let's move on to the next pair. Okay, Magun, please do your own analysis. I think you said that you have the same target as me. I think that's really great. Okay, so let's look at euro dollar, right? Another one of you was actually asking for euro dollar. Somebody was asking euro dollar. Hang on, I think okay, Omid, you're asking also for euro dollar on the 15 minutes. Wow, okay, that's a really low time frame. Normally I don't go down to the 15 minutes because it gets very noisy, right? The interesting thing about the market is that, you know, long term you get to see the big trend. Short term you think that you can play in line with the trend, but actually you tend to get more and more noise. All right, personally my style is that of a swing trader. Okay, but let's just take a look at euro dollar and I will go down to the 15 minute. Okay, so let's start off with the monthly again. All right, so yes, we are in a broad sideways market, okay, but believe it or not, we are very close to resistance right now. All right, just look at this zone here, very close to a strong resistance zone. All right, and if you were to do a retracement on the big time frame from the high to the low, look at where price is right now. Okay, price did test the 88, however it immediately rejected, okay, in close. Okay, it is actually at a 78.60, so we could actually see another drop, right? But I'm just saying, I'm just putting it out there. It is just on a very strong Fibonacci level. Let's go down to the daily. Okay, on the daily, we look at market structure, right? Price makes a low, goes up. I don't see any swing highs in the middle, but there is a high over here because there's a pullback, right? It makes a higher low. It makes a higher low over here, right? And then it makes a higher high, it makes a higher low, it makes a higher high. Now, these are areas of big movement, okay? So I'm going to do a Fibonacci on the last completed leg, which is over here, low to high. Look at that, okay? Just an example, on the daily price, low to high because, you know, it's upwards, right? So in the direction of the trend, there's a swing low, there's a swing high. Price came down, tapped the 61 point, where did it push? Negative 27.20, and it started trading sideways over there. Now, question is, right now, okay, there's a swing low here, and it seems like price is making a swing high here, but I cannot be for sure certain whether price movement has completed. All right, if I'm going to do a retracement from low to high, okay, price has broken below 23.6. Price could very well come to the 61.8, okay, and then push higher to the negative 27.20, because after all, we are very close to a long-term resistance zone, right? But since we are not clear whether this is a completed movement, right? If price really push higher, then my Fibonacci, remember, I said we have to always draw Fibonacci retracement, okay, on completed movement, right? Then we see if price push higher, my Fibonacci is going to keep shifting, right? So keeping this in mind, swing high, swing low. Let's go down to the 1 hour. Okay, look at 1 hour. Look at what happened. Okay, price very clearly formed a double top pattern. Okay, price formed a double top pattern, right? It's a strong push up from this. Sorry, it's a strong push. Look at this. I'm going to show you guys an example. There's a swing low here, all right, and then there's a swing high here. Any movement here are small movements compared to the big movements, so I will not consider them as swing high and swing low. So I can actually draw a Fibonacci retracement from the low to the high, and look what happened. Yes, even though price has broken below 23.6, it didn't go all the way down to the 50. It tested the 38.2. All right, Bartholomew, this is for you. You're asking about this just now. It tested the 38.2, but look, it did not push up to the negative 27.20. Okay, so classically, I like it to push into the 50, possibly even the 61.8. All right, and then push up to the negative 27.20. Okay, so euro dollar, right, did a drop. It came all the way back down to this level here, right? So we are sitting on a very strong support level. Okay, we are sitting on a very strong support level on the 1 hour. Now there's a swing high, there's a swing low. Let's draw Fibonacci from the high to the low. Okay, again, price went to the 38.20, right? Immediately dropped back down. I don't think it's going to go to the 27.20. All right, it's going to be just probably trading sideways. If anything, okay, I'm thinking price could very well push up to the 61.8. If price pushes up to the 61.8, then I will have a bit more confidence to play the drop down to the negative 27.20. All right, but right now we are, okay, the euro dollar, not as clear as the pound dollar, is actually in a broad sideways movement. All right, let's go down to the 15 minutes. Okay, look at market structure, right? Price made a high, price made a low, price made lower high, price made lower low. All right, you can consider this lower high, lower low, but look what happened next. Price made a higher high. This is the first clue to tell you that, hey, you know, the trend might be changing. And instead of a lower low, price makes a lower high, right? So very simply, what is this? Hey, Isaac, you know, trend is changing, right? So there is a swing low here. I'm going to remove this support. Okay, there's a swing low here. There's a swing high here. Fibonacci retracement. Immediately, you guys got to tell yourself that, right? Draw in the direction of the move, low to high. Look at where price is. Price tapped the 78.60. All right. If this is the case, then I will expect price to push up. All right. The trade seems a bit far gone now, but I expect price to push up towards the negative 27.20. But it seems like negative 61.8 is more important. Why? Because there is a graphical level over here. All right, so definitely the euro dollar seems like it's going to be in a sideways motion, in a very broad sideways motion. I don't find any good entries for now. All right, if it was back at the 78.6, perhaps could enter. All right, but right now risk reward's not very nice for me. Okay, so if I'm going to put a stop loss, I'll put it below the 100%. Okay, the stop loss will probably be somewhere here. Okay, entry, I'm not sure where my entry is going to be. If I hit that market, right, it's just going to be very bad risk reward. Okay, so that is euro dollar. All right. Okay, so let's okay, I have a bit of I need to get on with the slides. Okay, so this is how we use unconventional Fibonacci retracement ratios. All right, so let me see. Okay, so Travis, you're okay. So Omid and Magun, I hope this answers your question on euro dollar. Travis, you're looking at dollar CAD. I will get to it at the end. Okay, I hope that answers your question. All right, Travis, give me a moment. Okay, so Bartholomew, you have a question. Do I wait for reversal candle before taking my trade to negative 27.20? Okay, if my trade is very much in line with the longer term picture, all right, I tend to put a pending order. Okay, so that's a bit of a higher that's a bit of a higher probability trade for me, but also slightly more risky. Okay, but negative 27.20 really works like a charm. All right, it is a very beautiful thing, this negative 27.20. All right, I won't say it works 100% of the time. There's no such thing as 100% in the markets, as as you guys would know it by now, but I would say it works at least 80% of the time, and for me that is good enough. All right, so Magun, what's the screen size? I'm currently on a 27-inch. Okay, my eyesight's failing me, right? So I've got slight astigmatism and a very high degree, okay, short-sightedness. So anything smaller than 27-inch is going to be hard for me to see. All right, so I hope that answers your question on the side. Okay, so yes, Daniel, you're right. Only death and tax is 100%. You are exactly right. Okay, okay, before I continue, Darren, can I show again how I get 2720 within my Fibo chart? I don't understand what that means, but this is how I draw my Fibonacci. Okay, these are the Fibonacci levels. To add 2720 in, just double click on it, and you can actually under style, you can actually put in the levels. All right, if you have FP markets on MT4 or MT5, right, you can actually see this Fibonacci retracement tool at the top. Click on it, draw it anywhere. Okay, right click, select properties. Okay, you can actually key in the levels. All right, so I'm going to put black. Okay, and all I have to do is I press add the level. I just put negative. Okay, 0.272, and then the description I'll just put negative 2720. All right, and the level is here. Okay, the level is here. All right, so I have actually dollar franc on the H1. Look at that, I just saw something on dollar franc. Right, there is give me a moment. Where I need to draw a box. I want my box. Where's my box? Okay. So we have a swing low over here. We have a swing high over here. Look at what happens when I draw my Fibonacci from the swing low all the way to the swing high, and then I extend it. Okay, so price comes all the way down to the 61.8, and look what happens. It trades sideways, yeah, but confidence in the strategy, it pushes all the way up to negative 2720. Look to the left in line with a graphical swing high on the H1. So dollar franc, right? Pretty nice trade over here. Okay, so quite straightforward as well, just basing off Fibonacci. Okay, so this is how you can do the setup on the FP markets, MT4, MT5 platform. I believe they are the same. Okay, so very quickly, come on guys, I'm gonna move forward a bit faster. All right, so now moving on, understanding Fibonacci confluence zone, right? So just very quickly, how many of you know what confluence zones are? I already gave you some examples just now while doing some analysis with you guys. Okay, so there are some of you that knows what confluence zones are. Now, that is fantastic, Travis and Richard. Okay, Daniel, yes, you're right. Confluence is with other things. Yes, that's a very quick way of summing it up. Robert, same level from different measures. Yes. Okay, Daniel, I don't understand what you mean by like 0, 0. I think that's the numbers sort of round numbers. Okay, yeah, well, round numbers can be sort of a confluence. Okay, so a confluence zones, confluence a very broad word, right? And confluence can be anything, right? It just basically means, to put it very simply, the stars are all lining up in a very nice fashion. Okay, all the planetary systems in the solar system, in the galaxy, in the universe are all lined up, and this is like a 1 in 100% chance. Okay, that the error of margin is so low that you cannot call this coincidence, right? So a confluence level will be something like that. Okay, so when we talk about confluence level, you can say Fibonacci levels line up with moving average support or resistance, and it lines up with graphical support or resistance, and it also lines up with round numbers, like some of you said earlier. Some of you also mentioned pivots, right? So when all this thing lines up together, that level becomes a very strong support or resistance level. You can literally close your eyes, click buy. If price is above it, you can click buy, close your eyes, click buy, and price will definitely bounce. All right, or price is below, you can close your eyes and click sell. Price approaches this confluence level, it will drop and react, right? So those are confluence levels, right? So generally, most of you are getting it. You guys are understanding what confluence levels are. Bartholomew, you're right, area of technical convergence, all right? It has more than one retracement. So when we are talking about Fibonacci confluence, right, essentially it really means, okay, Fibonacci levels lining up very nicely, right? So you have a 61.8, okay, on the daily, right? Maybe lining up with 50%, okay, lining up with a 50% on the 4-hour, right? And then you zoom in down on the lower time frame, okay, you have another 78.6%, okay, on the 1 hour, right? So, and then after that, you look at price, right? Price, there is a strong support. Price actually tested it like 3-4 times, okay, and it's actually coming back down to test it again. You know for sure that this is a very, very, very strong confluence zone. All right, so this essentially a lining up of Fibonacci levels is called a Fibonacci confluence zone. But what is more powerful than a Fibonacci confluence zone is when key Fibonacci levels are lining up together. So I want to see multiple 61.8 lining up together, multiple 78.6 lining up together, right? Multiple -27 lining up together. Okay, so let's look at some examples. Okay, so Daniel, you're asking, I have used -27 and 61 and the other 127 and 161. Do I use the first two when I break to new level in the trending direction, and last two when it pulls back in a trend? Okay, okay, I kind of get what you mean. All right, when price is at -61, okay, when price is at -61 or -27.20, I try not to take any trades, okay? Or same story, right? When price is at 127.20 or 161.80 retracement, I try not to take any trades, okay? I will look for how price develops, all right? There will never be 100% confirmation that price is going to reverse completely at that level, right? So we always have to wait to see what would happen, all right? We always have to wait to see what will happen. Okay, so let's look at dollar CAD. All right, let's look at dollar CAD. I think one of you actually asked for dollar CAD earlier, Travis, I think. Okay, so let's look at dollar CAD. Okay, so dollar CAD, I'm just going to keep it simple. Okay, we have the, okay, dollar CAD is, yeah, it was a couple of months ago. All right, I was actually telling my colleague, you know, hey, you know, dollar CAD, the drop is really to infinity and beyond, right? Breaking this strong support level, okay, we're going to see a strong drop. So I'm just going to show you an example of Fibonacci confluence, right? We have swing highs here, swing low, swing high. Okay, not Fibonacci retracement, but Fibonacci extension. 0.1, 0.2, 0.3, the 100%. Let's open up the 100%. All right, the 100% is over here. All right, look at where price reacted. Okay, now I also want to show you guys, this is on the monthly. All right, remember we have a strong 100% Fibonacci level there. Let's go down to the weekly. Okay, weekly a bit harder to see, right? Because price just drops all the way down. But I want to show you guys areas of big movement, a bit hard to see, right? We have a swing high over here and a swing low over here. Just change to line chart, you can see that there is generally quite a big drop. Okay, this is also a big drop, right? All these are smaller drops, but comparatively, this is a big drop. So you can actually do a Fibonacci retracement from high to low in direction of the trend, right? Look what happens. Price goes down, tests the 61.8, drops all the way down, overextends at a -61 for a bit, all right, and it's starting to trade sideways. Okay, so Daniel, in line with your question earlier, okay, so when price actually reaches this kind of levels, this kind of unconventional Fibonacci levels, right, I don't immediately take a reverse trade. Okay, right, I actually wait for price action to develop. All right, so right now price is there, trading sideways, right? So this is starting to be a strong confluence zone level. Okay, so it's 100%, it's a -61.8%. Okay, let's go down to the daily. All right, so the daily is going to be a bit where am I? Negative 61.8. Okay, I'm just going to put it there. Okay, and remove this line. Okay, so on the daily is a bit harder to see, right? You can't really see areas of big movement. So nothing much on the 4 hour. Let's go to a 4 hour and see. Okay, price is trading sideways. It's really, really ugly. All right, swing high to swing low. Okay, I'm just going to open up triangle ratios. You can see a price is holding at 61.8, right? You do it in the other direction from swing low to swing high. Where's price holding? 78.6. Okay, so right now for dollar CAD, really, because it's at a very key level, all right, we are actually seeing price in sort of a triangle developing. Okay, so for dollar CAD, I'm expecting price to at least push down to this level here, the ascending trend line support. All right, and if I were to take a swing low to swing high, I'm thinking it's the 78.6 retracement or the 61.8, right? So it's in line with the 78.6. Okay, so I'm expecting dollar CAD to actually drop slightly lower to this level. But why dollar CAD is really trading sideways is because, as we have analyzed on the bigger time frame, it is on a strong 100% extension. It is also on a strong negative 61.8 on the weekly, right? So that is why dollar CAD is in a pause right now. Okay, so in a lower time frame, you can see that it's just going to be a short drop, right? So Travis, I hope this answers your analysis on dollar CAD. If we actually go down to the 1 hour, you can actually see it clearer, right? Okay, the negative 78.60 here. Okay, I want to look for a strong confluence level. Okay, I want to look for a strong confluence level. We also see a swing low here to this swing high. We can do another Fibonacci retracement on the 1 hour, low to high. Okay, I'm thinking this could be the 88 actually. Okay, so you're seeing the 88 line up with the 78.6. Okay, so this is what we can consider a confluence level. It is not the strongest because there's no real graphical levels around it. All right, but it is a confluence level. Okay, so Travis, I hope that answers your question. Right, so I hope this also helps you guys to understand Fibonacci confluence level. All right, so let's go on to Daniel's request, which is Aussie CAD. All right, let's look at Aussie CAD. Okay, start off with the big time frame. Okay, I don't like the way the Aussie is actually moving, but anyway, there's a swing high over here, right? Price goes all the way down to over here. Very clear cut swing high to swing low. Draw in the direction of trend high to low. Look at where price has reacted, 78.6. Now, 78.6, you can just open up the negative 27.20. All right, long term, we can expect price to at least drop down to negative 27.20. You look to the left, it is actually a strong support zone around here. All right, I would say this is really a zone. Okay, the bigger the time frame, the more inaccurate the price levels are. All right, but I will have intra short-term targets along the way. All right, I'm just keeping this in mind. Okay, let's go down to the weekly. Look at this. Look at this. Okay, very nice example. There's a swing low here. There's a swing high here. Fibonacci retracement immediately in the direction of the trend, low to high. Open all Fibonacci ratios. Look at what happened. Price has already gone to 88%, right? For me, this is a clue that market is reversing. And where's price going to reverse to? Okay, I'm going to have my first level over here at a 127.20, next level at a 161.8. All right, don't forget, this is a strong big move in a bigger time frame. If I'll do a Fibonacci retracement from low to high, we're starting to see confluence levels lining up. Look at that, 50% retracement, 61.8 retracement, falling in line with 127.20 and 161.8. So these are nice confluence levels. Okay, so if anything, I'm expecting price to drop down towards this level and this level. All right, so it's not going to be a straight drop down, okay, but price will do its zigzag drop downwards. All right, so that is really how we use Fibonacci retracements. Okay, so let's go down to the lower time frame. Okay, it's going to get messy because there's going to be lines all over. I'm just going to remove it. Just keep in mind, okay, where all these lines are coming from. Now, look at this. Okay, there is a swing high over here. Okay, I can take this as a swing low. Okay, I will not take all these small movements. I'll not take all this as swing highs because all these are small movements compared to this big push up, compared to this drop down. Okay, so I'll do a retracement from high to low and look at where price reacted on. Okay, price broke, came up 78.6. We can expect price to come down to the negative 27.20 as well. Okay. With another intraday take profit at the last swing low. And market structure makes sense as well, right? Lower highs, lower lows. We are essentially in a downtrend. Okay. All right, so that is the intraday analysis for Aussie CAD. All right, Daniel, I hope that answers your question. So you have another question. Tomorrow we have durable goods. I keep that in mind for the dollar if I trade it or I look at technicals. Well, if you ask me, okay, I always keep this important news in mind, right? But at the same time, I tend to rely more on technicals. Okay, I have to be honest. Okay, I am more of a technical trader than a fundamental news trader. Reason being that I believe price action would have priced in all this news already, right? So you know the saying, right? Buy on rumor, sell on news. Okay, so that is what I believe in. Okay, so Bartholomew, you are talking about the Fib expansion tool on MT4, the same with Fib extension tool in TradingView. Yes, it is the same. Okay, so you can right click on the toolbar, click customize, look for Fibonacci expansion. Okay, it is the same, right? There is this Fibonacci expansion. Okay, wait, I drew it wrongly. Okay, so something like that, right? So you have the Fibonacci expansion levels. Okay. All right, so this is you can actually activate it here. Same thing, right click on it, select properties. You can actually edit the properties here as well. All right, but personally, in my own preference, okay, I try not to use too much of Fibonacci expansion because it is very complicated. There are 3 points, right? We want to try to keep it as simple as possible. All right, so I really hope that, you know, going through the live examples with you guys, putting everything together, you guys can actually have a better grasp, a better understanding of Fibonacci retracement. Okay, it is not an easy tool to use, right? Easy to learn, very difficult to master. So guys, practice, practice, practice. Okay, so okay, one of you have a question how you can trade more accurately from MT4 mobile. Well, I always believe that you know, like I said earlier, I need a big screen. Okay, I always want a bigger screen, and that for me is more important. Then I can start seeing the trend better. On a mobile phone, right, even if you have the Samsung Fold, right, it's still going to be a bit too small. Okay, and it's going to be hard for you to pick the points exactly. All right, so in the interest of time, right, I have already overrun. I don't want to, I want to respect your time. Just as you guys give your time to me, I want to respect your time. So I shall not overextend this, okay? If you guys have any feedback, any questions, right, that you guys would like to have answered, okay, please send an email, right, to this email right here, support@fpmarkets.com. Okay, if you guys want a recording, okay, if you guys want a recording of this webinar, all right, you can also email support@fpmarkets.com, and what really you guys need is your name, okay, your email, all right, because I believe the FP Markets team, they have access to everybody who actually registered for this webinar and your email that you registered for the webinar with. So it's sort of like a double check kind of thing. All right, and then the name of this webinar, which is, okay, Fibonacci Retracement Strategies Part 2. All right, so just email the support@fpmarkets.com. All right, so well, everyone, I really hope you guys learn a lot. Okay, go back, review the notes, right? Do your own practice. By all means, back test, forward test. Okay, if it works for you, right? If you think that Fibonacci retracement is a very powerful tool, okay, please use it as part of your trading methodology. All right, you have my words that actually the institutions look at Fibonacci levels as well. All right, that is based on my own professional experience. Okay, so yeah, Zahid, go ahead, check out the negative 27.20. All right, thanks everyone. Wish you guys all the best. Please stay safe, take care of yourself, take care of your loved ones, and trade safe as well. A lot of important dollar USD news coming up, right? So manage your position properly. Okay, so I will catch you guys again until the next time. Take care. Yes, Daniel, I won't sell the wife, definitely not. Right, I will be crucified for that. Okay, so have a great time. I will catch you guys again. Take care, everyone. Goodbye.